First off, tax implications. Selling a primary home often comes with some capital gains exemptions. If you're a single person, it's up to $250,000 in capital gains that you don't have to pay tax on. And if you're a married couple, it's up to $500,000 in capital gains. Now, if you convert your primary home into an income property and move into a new primary home, this can create some capital gains issues if you decide to sell that home after 5 years. Let's say you bought your Orange County home, 8 or 9 years ago for $700,000. And now it's worth $1.2 million. And you decide to sell the home rather than rent it out. You could take that $500,000 profit, the capital gains that you made on that investment, and not have to pay taxes on that. Versus if you rented that property out for 5 years and then you sold it for whatever market value is in 5 years, you would have to pay taxes on the capital gains of $800,000 minus whatever your depreciation is. Also, being a landlord comes with a lot of landlord responsibilities. California has very strong tenant protection laws, so they're not the most friendly state in the union to be a landlord in. This can be time-consuming and costly for landlords, especially if you end up with a bad tenant who stops paying rent. This can include a time-consuming eviction process, serving notices. Renting property involves ongoing costs. Remember, you still have to pay the maintenance for 2 properties. So if the water heater breaks at your rental property, you better be ready to shell out for a new water heater plus any damages that it did to the property, because the tenant has the right to enjoy the property as you rented it to them. There's the time commitment of being a property manager from afar. Now, you could hire a property management firm. They're going to take about 8 to 10% of whatever your monthly rental is to manage that property. But again, if you're taking it on yourself, you have the time commitment of being a property manager as well as whatever else you're doing with your life. Remember, because you're renting a used home here in a coastal area, there could be higher maintenance costs just because of that. Let's talk a little bit about financial considerations. First and foremost, the capital that you leave tied up in your other primary residence in order to rent it out and become a landlord could be leveraged into your new property in order to get you a better mortgage rate, to get you a lower mortgage payment. It could be used for renovations on your new home. It could be used for a lot of things. You could take some of that cash out, put it into an investment account, and invest it elsewhere. There's a lot of leverage that you can get from the capital in your current home if you don't leave it tied up in your rental. Owning multiple properties could affect your debt-to-income ratio when you go to buy a new property. Remember, you're still liable for the mortgage on that property as well as your next one. Even if you have it rented, they're still going to count that against your debt-to-income ratio unless you have a history of renting that property and a contract with a current tenant. There's also increased liability of being a landlord. You have to have specialized insurance for your rental property. You could be liable if somebody gets hurt on your property, even if it's one of your tenants who lives there. You're going to want to increase your personal insurance and make sure you have an umbrella policy to cover everything in case something happens. So what you'll want to do is you'll want to run both the comps for selling, right? Talk to your real estate professional. See what it's going to look like selling versus renting. Have them run a rent survey in the area and the comps for selling, and weigh the odds and see which is going to be better for you. You really want to dig down and evaluate if that rental income is going to be advantage enough for you in order to become a landlord, or if it's just going to become a liability or something that's a long-term, I hate to say it, but pain in the butt. I've sold lots of houses for lots of landlords who started out with really high ambitions and really great lofty goals, and they just got sick of it after a while. Evaluate your risk, right? With the fluctuating rental market, there's always risk of a vacancy. Can you afford for that property to be vacant? And if so, for how long? So make sure that if you are going to rent your property, that you've considered all the financial implications of it and you've planned ahead for it. Check the rules and regulations. Look, a lot of properties here in Orange County have HOAs, homeowners associations. Check your homeowners association in regards to renting your property. What do they have to say about it? What restrictions or rules do you have to follow as the owner? Because remember, the end responsibility as the owner lies on you. Some HOAs have strict outright rules against renting your property. They either limit it or forbid it altogether, so check the rules ahead of time. If you do decide to say, forget you, Mr. HOA board, I'm going to rent it anyway, that could lead to potential liens, fines, levies against your property. You don't want to fight that fight. There's an emotional toll too here. Managing a rental property, especially from afar, can lead to a lot of stress for you. There could be a huge sentimental attachment to your home, so it could be really hard for us to see somebody else living there, especially if they're not taking as good a care of it as we would like. I'm selling a property right now for a client. When I met with her, she had tears in her eyes. She said, those tenants have taken such bad care of that property, Lucas, that I just can't stand to look at it anymore. The carpets are thrashed, there's holes in the walls, the kitchen is destroyed. If you do decide to become a landlord, be prepared for the emotional impact that it's going to have on you of somebody treating your home less than you would treat it. Almost every tenant I've ever met just doesn't have the same pride of ownership and pride of possession that you and I have in our homes. Okay, thanks for hanging around all the way till the end. Here's my special tip. Consider your future property flexibility. If you decide to sell that property down the road that you've rented out, selling a property with a tenant in it is almost impossible. And then you're going to have to vacate that tenant, repair any damage the tenant's done to the property, and sell the property at market value in order to realize your full investment potential. So it's going to be a longer, harder process than if you decided to sell it now while you live in the property. You guys, if you got some benefit from this video, click like and comment and share below. I'm Lucas Smith, broker owner of Sell My Home Real Estate. Thanks so much for watching and have an amazing day.